Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Who is at the sidelines of the Motilal Oswal Global Investor Conference, and with him, that important foreign investor voice that I was speaking about from Solitude Investments, Werner. Over to you, Nimesh.
Thanks, Sada. So yes, I have Joel with me. He's an FI based out of Hong Kong, and he invests a lot into India and China as well. So Joel, thank you very much for talking to CNBCTV18.
Thank you for having me.
I was looking at the brief profile and the profile of your company, and it suggests that your major investments are in India and China. First of all, in India, well, the markets are up at record highs, but even currencies depreciated 10%. So net for an FI investor, it's not much you've made in the dollar terms. So what's your view, Joel, in India at this point in time?
Thank you. That's a great question. The rupee has certainly been a headwind for our investments in India. I think the one thing that causes us to be calm and forward-looking is that our expectation, generally speaking, in some of our markets is that we'll find weakness in some of the emerging market currencies, if I can use that term, versus the dollar. We're a dollar-denominated fund. So when we underwrite any given investment, we're looking for, first of all, we're looking for a very high return on our investment. So when we underwrite an investment, we're looking for 2 to 3 times our money in 1 to 2 years, which makes a very special investment, and they're hard to find. So we tend to have 15 investments at any given point, and 10 of those investments tend to make up 80% of our capital. So we're looking for very specific metrics and qualities of those businesses and of those managers. But the weakness in the rupee has been a pain. It's been, I would say, a little frustrating. I think the discussion around 2 things driving that, I think, would be the rebound in oil and tariff war. I'll use that in quotes because it summarizes a lot of things that are happening, have happened, and what might be ongoing in discussion. But because we're looking for companies that are compounding at such high rates of return on their capital employed, weakness in currency, again, we would expect somewhere between 4 to 5% depreciation in the rupee versus the dollar as we underwrite our investments. It's been a little bit heavier this year, but not necessarily out of step with other currencies where we're invested. So while our fund is effectively flat on the year to date, our compounding return since inception is about 12.8%, and that's really how we track our performance with our investors.
Okay. You spoke about being flat this year, Y2D, for the India portfolio, and essentially because of exposure to the mid caps and small caps. That's seen a bit of brunt since the beginning of the year. How are you looking at that space, and after the correction, do you think there is enough opportunity which is emerging in the mid cap and small cap in India?
I do, and thank you for the question. It's a great question. Again, our strategy is to invest in companies that have market capitalizations of, and I'll use U.S. dollars, forgive me, just it helps, it keeps it easier in my head, between $500 million US dollars and $5 billion US dollars to start as underwriting the investment. That would fall into the small and mid cap universe. So that's really our hunting ground. So while I've not talked to a number of investors who have will pick and roll and move up into larger caps, that's not really our mandate, and that's not really our, I'll use a quote, wheelhouse, where we're looking for great investments. It becomes just a question of the law of large numbers, where if we're looking for something that can grow by 3x, and then by the nature of something that can grow 3x, it can probably grow by 10x over a much longer period. If you buy a very large market cap company, it's very hard to do that. So that's a little bit of an indirect question to you, so if you need to follow up, I apologize. Yeah, thank you.
Joel, correct me if I'm wrong, but I was looking at some data, and it suggests me that your past exposures in India has been largely in the financials, the BFSI space. I don't want to name individual stocks, but largely in the financial space. Is that something which still excites you? And apart from financials, where do you think there is investment opportunity right now as far as India is concerned?
Sure, thank you. That is historically true. We are generalists by nature, and I'm a generalist by training. For better or for worse, I do think it's personally the best way to invest. We had a large investment in IIFL. That did very well for us. Especially the first half of 2016, we're still a large investor in that company for our fund. I think there's a great opportunity as that business separates into 3 separately listed operating companies. But our exposure to financials is really a byproduct of looking for asset management companies. So IIFL has one of the world's best asset management companies. We have a similar investment in China named Noah Holdings, which is effectively a very similar business without an NBFC, but has a terrific asset manager behind it. Asset manager businesses tend to not have the same balance sheet implications as traditional financials do. One of the things that we look for at Solitude Capital Management is we're looking for very clean balance sheets. It's like one of the things I've learned over investing in my lifetime, where our fund, we're called a hedge fund or a special purpose investment vehicle, but we don't use leverage at our fund level. And we generally are looking for companies that have net cash or very conservative balance sheets on their own company level.
Okay. So given that, you look at net cash and clean balance sheet companies, does Indian IT mid-cap stocks or IT stocks fit into your bill? And do you have any exposure to any of the Indian IT names?
We do not have, I'm just checking, we do not have any exposure to the Indian IT names. It's been a very challenged space for quite some time, and so we've been just kind of staying away from the fray. That being said, myself and my investment team, we cover the two main countries that we cover are about 2.5 billion people and have very large tangible addressable markets. What we're looking for are niche businesses run by extremely talented managers that are highly ethical, driven to create wealth. And not only have inherited wealth, but to create their own wealth for themselves. And creating wealth is via the share price appreciation. So the IT sector is exciting, but most of that excitement, in my opinion, is in the private investing world, where we don't do any investing.
Okay. I believe you also have a bit of an exposure into the Indian consumer space, the consumer staples and the consumer discretionary. There has been a lot of argument about valuations being quite rich for those sectors in India. Do you think there is still money to be made in the consumption stocks in India?
Absolutely. I mean, we're starting at such a low base. I think to look at things like companies where they have a lot of operating leverage and where the companies can grow. It is, again, very early days. A lot of people make the comparison that India looks a lot like China did in 2004. I went to China in 2004. I can see the comparison. Obviously, very different countries, but you do look at a number of the consumer discretionary stocks. I can think a couple off the top of my head. I don't want to name them because to offend anyone, but they do trade at like 70 to 100 times earnings and will go up, and we don't own them, and that can be challenging from that perspective. So we do tend to be disciplined buyers. At most, we'll pay basically 1 times growth on profit after tax or on an EBIT basis on a multiple, and we're looking for that to basically go to 2 times growth.
Okay.
Yeah.
Okay. The other big market where you have a large exposure is China. What have you making of the Chinese data of late? And from a point of view of Indian commodity stocks over the Indian metal market, how are you positioned there, and what's the broad view on the China per se?
China. So I've lived in Hong Kong for about 6.5 years. I've worked with my Chinese colleague who works with me now at Solitude Capital Management for approaching 7 years now. Making broad statements about China and Chinese data is very difficult. We tend to avoid investing in any commodity sector in general. That being said, you can't ignore it because it will drive the valuation of the currency, it will drive trade flows. What we'd like to see is an end to, I'm a believer in global trade, world trade, open borders, and value creation, and nations interacting together.